What's going on, guys, and welcome to another full transparency trading session. I'm your host Sebastian, and I just wanted to go over really quickly something about evals. And I'm not going to hold you guys long, but there's a key to passing evals. As you guys can see, I have passed a boatload of evals, and I actually have one pending right now. Close that. I have one pending right now, so you don't have to immediately open and pay for your evals. You can leave them pending if one of your other evals fails. But you guys can see that I started out on 3/12. March 12th was my very first eval that I passed. I passed it within 6 days. And then on the 1st of April, I passed one, then the 4th and the 6th. And then you can start to see that I start stacking these up fairly quickly that first month. That first month, I am knocking them out. I went for like 5, and then I tried the 150. I passed the 150. Then I tried, basically what I was trying to do was build up to 20 accounts as fast as possible. And that was my entire goal for the first couple of months. I built up to my 20 accounts, and then they had a sell, the best sell that they had the entire time that I had been trading, for the 250s. So I bought like 10 250s, and I was like, well, if I can replace 10 of my 50K accounts, it'll be worth it, especially because you could buy them for I think it was like $18.70 at the time. It was ridiculously cheap. And then after that, I had a few fails and, a few negative accounts. Get out of here, please. And then I started passing more 250s, and then I passed a couple of 300Ks as well. Just recently for the 300Ks. 830 for the first one, 9.6 for the second one. So about a week apart, right? But one of the biggest keys to passing these evals is you need to start with a lead. You absolutely need your first trade to put you in the green by a decent amount. The more you can make on your very first trade on the account, the more likely you are to pass that evaluation, right? So how do I do this? Well, for me, you guys know my strategy is I'm looking for about a $10 range on ES, right? But I'm looking to take about $5 of that. So you need your first trade. I don't care if you're trading 1 contract, 2 contracts, 4 contracts, etc. Based off of the amount of experience you have, you need that very first trade to go for $5. So that's $250 if you're doing 1 contract. That's $500 if you're doing 2 contracts. That's $1,000 if you're doing 4 contracts. And if you do 4 contracts and get $1,000 on your very first trade, it's going to make passing that 50K so much easier. And there are several ways that you can actually go about getting into a play that can make you that much money. And we're going to go over a few of them right now. Well, first, I want to show you guys how when I'm setting up the chart, what I'm looking for the trade, right? So when we're having a day like this, we're falling aggressively, and then we start consolidating. I start using that consolidation as my first entry point. Unfortunately, we pushed down and we actually gapped up in the after hours back to the consolidating range, and then started pushing up from there. So now when we get to the high right here, and then we make a little low, now I got to start looking for an area over here that's congruent with what happened over there. So then I go over here, I go to add drawing, I go just above this wick here, and I go, okay, cool. That's where I'm looking to get in. All right, we come down to it already. We popped up off of it. So now we're going to where? So now I'm looking at this area right here where I have this line from the previous day's opening. And I'm like, all right. And then up to here, up to there is an area where we could be going to. So I'm seeing all of these breaks. I'm looking at all this consolidation. I use this consolidation right here on the left-hand side in the pre-market as my entry point. And I just wait. So the market opens that day. And this is SPY, but the same thing works for ES when you go over here. The difference is that SPY has the break because it has after hours and pre-hours, and in the after hours futures is just open, so we can just trade it, right? But you go back to that Monday there, and you're like, okay, cool. This one right here is the day that we're looking at. Boom. So now you're in the pre-market low, right? You're looking for that pre-market low. We put onto this area we didn't touch before. We head into my demand zone, and then we take off out of my demand zone. So there's 2 ways to do this. The dangerous way is getting into that very first candle right here at 9:30, right? But all you need is a $5 play. So let's see, we're at 40 here, and we end at 48. Now, how this can work, and this is the way that I like least. Well, let me tell you the way that I like the most. The first way that I like to trade is I like to wait for things to get to the highest points and then change direction, like this right here, right? I like for it to go to the highest point, wick out. I'm looking at the previous day and I'm like, okay, there's no high to go off of there. So we're at the highest point currently. We start reversing and then I get in either when it's an equal high, let's ride it down, or when we pass the 200 EMA if I'm late to the play, right? Same thing for over here when you're trading on SPY. You can do the exact same thing across all stocks. That 830, the problem with the 930 move is that it's up and down and up and down and up and down. Now, if you go over here to 830, 830 showed us pretty much what the market was going to do, how it was going to start. 830 popped up to the upside. So now we're like, okay, it comes down to the 9 EMA. Great entry. Great point to enter off that 9 EMA. That's the exact same line as this support that I have set up right here. So boom, we're supported. We hit the 9 EMA there, it takes off. We hit the 9 EMA over here, it takes off. There are a few times where the ES and SPY will be in sync. When that happens, it's a lot easier to take trades on ES. But this is the 5-day 15 minutes, so this is a 15-minute time frame, and they're all in agreement, right? I'd be taking this trade off of the 1 minute, so let's go down to the 1 minute real quick and show you what that looks like. So let's look at a 5-day 1 minute. This is the trade right here. Push down, get the wick up, beautiful trade right there. You're at the 9. So like, let's say I come down to my 200 and I try to get off of that, or I come up to the 23 and we start pushing up, then I get into there. But for me, what's going to happen is I'm going to end up waiting until all of this plays out, until this point right here where we get these equal highs, and I'll ride it down. You know, or because I'm in the pre-market 930 right here, we hop in, it's going up, we're taking it to the upside, we break the 200 EMA, we stay in the trade, and then you can just ride it up until you fall back below the 9 EMA, which gives you a full 30 minutes of just riding it up basically. And that's just one of multiple ways that I do this, right? The second way is, like I was saying, the more dangerous way, getting into that initial 930 burst. The problem with that is you 100% have to be correct, because it's going to move so fast that if you're wrong, it's more than likely going to violate your stop loss, and you're going to end up starting with a large loss, which is why that's not something that I suggest. Part 3, you wait until 10 o'clock, okay? You see what 10 o'clock's move is. You don't immediately get in at 10 o'clock, because sometimes 10 o'clock is choppy like you see here. You wait till the 10 o'clock move is done, if it's going all the way up or if it's going all the way down, and then you take the change of direction. So 10 o'clock, we're going down, down, baby. You're shooting the Range Rover. 10:30 hits. We start changing direction. We wick down a little bit more. We're changing direction, going up. Now I'm taking that trade to the upside. Massive candle over here. 1 minute candle. You get 2 candles there, and then you get out when it starts to reverse, or it starts to pull back, right? So you get a great push up right here, another great push up right there, and this right here gave you 13 all the way to 21, so that's a $7 range, right? The key is to get $5 of it. I don't care how you do it. I just need you to get a $5 trade when you're starting out, right? We'll head over to Trading View, my normal screen. Refresh this, go to the 15 minute, and you can see as you look, I've got all these lines on the screen and stuff like that, right? Gave me an opportunity to enter right here, taking that to the upside. Gave me another opportunity to on the 15 minute, you see my lines and everything drawn out. We broke out to new highs today, so we'll go over the 4 hour. We got above the 4 hour time frame, and we took off to the upside. Then we started consolidating, so we'll go over and we'll draw that out on my actual screen that I trade ES. You'll see all of it, and it's going to be a lot messier. And as you can see, I have every single level ready and on here already. We got 15-minute lines, we got the 4 hour lines. The 4 hour lines are these giant full-size lines. These offer up the absolute best trades. Touch right there at 1040, never came back. Came down to the 200 EMA, went up, never came back. Hard pull down. If you were in this initial trade, you don't have to worry about a hard pull down like that. Same thing, goes all the way up, you get out. You're gonna get like $20, $30, $40 moves off of like the S&P 500 throughout the day, right? You just need $5. 07 to 12 is right here. This candle has more than $5 on it. This candle has more than $5 on it. This candle does not, but it's going to tell you that it's continuing. When you get a continuation sequence like this, you get more than $5 on the next one. You get a total of 5 on the next one. Consolidation, consolidation, consolidation. Crazy push up, push down at 10 o'clock. That's why you wait the 10 o'clock move out. see what direction we're gonna go in. We start pushing up, we push down right here, ending in the consolidation. Cool, you get the next pullback to the blue line, and then you can take off towards the upside again. More struggle, beautiful like $10 candle, beautiful like $15 candle. There's 21 all the way up to 33, all the way up to 36 if you look up here. So a $15 candle right there, a $10 candle to the downside right here, another $10 candle, and all you need is $5. I don't care if you get that $5 at once. I don't care if you get it between two trades, but you need a $5 trade to start your account, because you need to start with a lead. When you start down, it messes with you psychologically. And when I've started like down, usually I'm in a spiral and it's going to get worse. And then what's going to happen is I'm going to be playing from like a $1,500 to $2,000 deficit. And it becomes very difficult, because not only do you have to trade ultra conservative, but you also need to hit. You absolutely have to hit. When you only have $500-600 left in your account, you can't afford but 2 or 3 bad trades before you finally blow the account. So try to start with a lead. Try to hit a $5 play off the bat. And like I said, there's so many ways. A lot of people use trend lines, and then they'll trade the trend line, and when they get a break of the trend line, then they'll take their play. So let's say you're trading the trend line, you're looking for a breakout, right? You're above the trend line, above the trend line, above the trend line, above the trend line. Come to the trend line, break through the trend line, break out, and then break out some more, so you can take a trade that way. Same thing for when you're going down and you switch trends. So you're going down, 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 under the trend line, under the trend line, under the trend line, break the trend line slightly, break the trend line, finally explode off, right? So there's so many ways to get the trades to work. So that's completely immaterial. But what I need you to understand is you have to start with a lead. The larger the lead you start with when day trading these futures accounts as a whole, the easier your journey will be overall. If I can start with like $1,000 lead, it's cruise control for the entire rest of the time that I'm trading that. If I start with a $1,000 lead, you better believe I'm gonna finish that 50K account in one day. On the 250K, on the 150K and above accounts. So on the 50K account to the 100K account, right? I want you trading no more than 4 contracts. I would really want you starting, if you're newer, I want you starting with 1 to 2, because that lessens the blow when you do take losses. Because listen, a loss in a trade is inevitable. I don't care if I have a 100% day on one account, that probably means that I F the other account all the way up, right? So a loss is inevitable. Even when I'm losing, I'm protecting myself with my stop loss so that I never blow these accounts, right? And then that just, you have to keep buying yourself time to correct. Buying yourself time to correct. Don't revenge trade. Don't hop in and out of trades. Be patient, wait for things to happen. And if you wait for the trades to get to your zones, you're going to take far greater trades than you ever would by just guessing and just hopping in and out of trade. Like right here, equal highs, let's ride, all right? Going up, going up, going up, equal highs, let's ride. Equal lows, let's go. 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 Equal highs, let's ride. It happens over and over and over again. I keep my strategy super simple. I need to take these off because I don't want these on the screen. You know, I keep my strategy super simple, and that is just what has helped me to pass all of these evals. And the majority of my evals, and it's not a bragging thing, majority of my evals are in one day because I start out the day at 4 o'clock in the morning. I take my biggest trades between 8:30 and 9:30 when the market is just opening, because I know the volatility is high and the volume is high. And if you can ride the momentum, oh, there's another way. Piggybacking, all right? Piggybacking is when there's a large move up or a large move down that's already happening, and you just jump into that move and you ride it for your 5, 6, however long it'll take you, and then you drop out of that move whenever you hit like a decent target. Piggybacking works on like massive candles like this 1030 candle, massive candles like this 215 candle and this 2 o'clock candle. That's when you can piggyback the ride down or the ride up. This one is a little harder because you need to get in at the right time. If you don't get in at the right time and you get in at the middle, you can end up in one of the large areas where they pull back. Because if you ever notice with like a super fast fall, there's always quick pullbacks. Falling a lot, pull back a lot. Falling a lot more, pull back a little. falling a lot more, pull back a little. So you don't want to get caught in the pullbacks. You need to kind of catch these at the right times. So usually when you hit an equal level or when you hit a pullback to begin with is where I try to get like a piggyback. And I piggyback. I like piggybacking. It's cool. You can get a lot of money out of that, but I prefer just waiting for the action to actually happen and getting in where I know I have a safe point. These blue lines act as safe points for me. This blue line, they act as safety nets. I'm looking like, hey, if we break through it, we'll wait. If we stay above it, we'll take it to the upside. If we break through it, we'll wait. If we stay below it, we'll take it to the downside. And every time we stayed below it, I took trades to the downside and made a lot of money. This candle right here goes from 41 all the way down to 36. So that's a $5 trade in that candle right there. Next candle pulls right back up. And these are some of the best trades because you can get right back up to where you started and literally just hop right back in. And then on this one, I hop back in and it exploded to the downside in 1 minute. And I think I made a lot off of that candle, off of this piggyback ride. It wasn't a piggyback ride. I just happened to get back in at 2 o'clock, and then at 2:01 it went crazy. Right here. So 2 o'clock we get into this trade. Let's go down the 1 minute time frame so I can show you how crazy that really was. I want to show you how crazy that was on the 1 minute time frame. This is 2 o'clock right here, right? Watch this. So I get in here, 2 o'clock, it's pulling back. Like 2 o'clock in like 20 seconds, it just started falling and falling and falling and falling. Like $30. So I got a lot off of that. Then we started pulling back, and so when we got equal lows, let's go. I took it to the upside, got out right at the 200 EMA like I always do. And then push up, push up, push up. We stopped. We couldn't break this level right here, so we start to pull back, get the equal highs. Let's ride it on down. And from there, you get 40 all the way down to 33. So a $7 play right there. If you wait all the way to the 200 EMA, you get over a $10 play. So lots of ways, lots of ways to win these day trades, but you do really need to start with a win. If you start from behind, you start playing defensive, or you start playing too aggressive, or you start playing and then you have to play catch up, and then you lose some more money, and then you're down further, and then it's a vicious cycle. If you start off down, it is a vicious cycle. So I try to always start with a lead. But that's it for this video today, guys. I hope this was helpful, if at all. Please, if you have any questions, ask them in the comment section. I'll get back to you as soon as possible. You guys have a great weekend and happy hunting Monday. Let's get back to it.